In this video, we are going to discuss about what we can do on 1st February 2022, that is on the budget. You will notice that there is no stocks here because I am not going to recommend any stocks to trade tomorrow because the entire ups and downs will be based on what it announces on the budget, which sector is given more, which sector is given less. Based on this, the prices will shoot up and down. So there is no stocks. However, we can trade stocks based on the intraday. We will do only Nifty and Banknifty. What we can do. Now the first thing is that we should not go directional. The first thing, we should not go directional because you can get burned. If it is like previous year, then it shoots up or it shoots down, then you can make money. But in most of the cases, the market didn't give more than 2%, 1.5 to 2% movement on the budget day itself. But after budget, it moved on a direction. So what we can do is we can buy both call and put. Now we will discuss one strategy, what we can do. But before that, let's see what can happen. Now, technicals won't much follow tomorrow and it will be based on emotions mainly. So today it has made a indecisive candle. Like there was sell off from higher level, there was buyers from lower level, and it closed near 17,300 or 17,340. So tomorrow, if the budget is good, then it can touch 17,600, 17,800, all these levels tomorrow itself. And if it is bad, it can 17,000 or it can even break 17,000 tomorrow. So a big move we can expect. So I'll not suggest anyone to sell, but if you are looking for intraday, then you can just do a short straddle and for the IV crash, because what it happens, you see, we'll look at the option chain. Now for 3rd February expiry, this is the option chain, and you can see that this column is the IV. This is IV for calls and these are the IV for puts. So you can look at this column and you can see that near to add in the money, the IV is 36 and here 39. So this IV will shoot up before the budget, during the budget, and it can reach 50 to 70. Sometimes I have seen it reach 80. So as soon as the IV will go up, the buyers will take advantage of this. And after the peak, when the finance minister announces and the budget is going on and it completes, this IV will crash. So based on the IV crash, the seller may take the advantage. So for seller, what you can do is you can just sell for this premium 237 and 235. This is also very high. Looking at the weekly expiry, 3 trading sessions are left. So in 3 trading session, if you can grab this premium, it is good. So the straddle sellers are expecting 400 point move on either side. So the chart is also saying that. So you can just trade based on this IV if you're a seller. So next come in 15 minutes chart, and you can see that the market is quiet and it's very much range bound. Okay, on the higher side, it is not going up. It opened gap up and it did not break the first 15-minute candle. In yesterday's video, I clearly said that if you plot a 15-minute candle and whichever side is break, you trade on that side. So it went up but immediately came down. Then it broke out from here and it is going down. It's more or less flat, actually flat. So this is indecisiveness of the market, and I cannot predict what can happen tomorrow. But looking at the previous data and the previous things, we can expect an up move, as the call premiums were much higher than the put premium today. So everyone is expecting the budget to be good, but you can just do both call and put, and just if it moves in either direction, you can just grab on to it. So I'll not give any levels that if it gaps up, what happens, gap down, what happened, because I sincerely believe technicals will not follow here. So let's look at Banknifty. For Bank Nifty also the case was same, but I said that on the first 15-minute candle, whenever it breaks, you can just put a 60-point stop loss and you can sell. And if you have done that, then about 1:3 profit there was. But on a close by basis, you can see that it is a range bound market. So on daily chart, if you see, then also you will see one thing, that it is kind of a homing pigeon pattern. Though it's negative, it's the homing pigeon symbolize negative, but this low is not taken out and this high is not taken out either. So it is in between. So if I can expect that if it tries to go up, then at least 39,000, 40,000 level can come tomorrow. So I can expect 40,000 level on the upside, and if it falls down, then 36,000 level on the downside. So it may be directional, that if the budget is good, it will go up. If it is down, it will come down, but it will be volatile throughout the day. So I'll discuss the strategy, what you can do. Now the market will open at 9:15. So we'll go to the 5-minute chart. So let's say market opens anywhere, gap up, gap down, flat, anywhere. We will let first 5-minute candle close. Say this is the candle of the first 5 minute. So this is the high, this is the low, and this is the closing price. So whenever I hover my mouse on any candle, you can see this open, high, low, and close. So this is the closing price. So whatever the 5-minute candle, whatever the first 5-minute candle closes, means at 9:21, we will look at Bank Nifty chart and we will have this type of candle, one candle. And when we hover the mouse over here, we will look at the closing price. So say this is the closing price. Then the closing price is 37,957. So what is the nearest strike price? The nearest strike price is 37,900 or 38,000. Now between these two, I'll see, or if it is more clearer, the premiums, we'll look at the call premium and the put premium. The premium of call and put should be more or less equal. The difference should not be huge. So let's look at Bank Nifty option chain. Okay, so this is the Bank Nifty option chain, and you can see that this is 705, this is 719, 38,000, and 38,100 is 661.95 and 761. So here the difference is more, and for here the difference is less, 719 and 75. So I will take 38,000 as the strike price. So at 9:21, I'll look at the at the money options, and where the premium is more or less same or difference is less, I will buy both of them. I will buy both of them. So that is the first thing. So let's see, I have bought 38,000 call and put. So the first thing that did is 38,000. This is for example, this 38,000, this strike will be chosen based on the 9:20 closing. Wherever the 9:20 candle or 9:15 candle, a 5-minute closes. So at 9:21, we'll look at the first candle of the day, and wherever it closes, that will be the strike price. So I will buy both call and put, and I'll just hold it because I'm expecting one big move. One thing can happen, that if it goes very high, then the thing is that we will gain much on call and we will lose less on put. And if it falls down, then the reverse thing, we will gain on put and we will lose on call, but this put gain will be huge. But the problem will be if it becomes volatile, it goes up then comes down, then we will lose on both call and put, because we will lose the delta value, we will lose the theta value, and we will also lose the vega value, that is the IV will crash. So to prevent that, whenever market goes 1% up from where it is, so it is 37,957, so we can expect 38,000, so 380 point we can expect, so or 400 point if you round up. So after opening, after you have bought both call and put. You have bought both call and put, and after you have bought, when market moves 400 point from where you have bought, that is 1% from where you have bought, we will buy call and put for the strike price that it will be currently in. So let's say you bought 38,000 call and put, and the market was at 38,000 when you bought it. Then when it goes up 400 point, then you will buy 38,400 call and 38,400 put. Now if it reverses also, then this will give you loss, but this will give you enough profit so that you will close in profit and not in loss. The same thing will happen if it falls down. So you have sold, you have bought at 38,000 call and 38,000 put. So if it falls 400 point from here, so at 37,600, whenever it crosses, we will buy 37,600 call and put together. And we will leave it, and we will close everything. We will close everything between 3 p.m. to 3:15 p.m. And we can go for BTST also tomorrow, that we will discuss on the Telegram channel that we have. You can search for stock market ritual Telegram channel. Link is in description. You can go there and join, and we will discuss what we can do. Because if you see the past data, then you will see that even on the budget day, it makes some volatile candle. The next few days it moves high. So I'm giving this strategy for intraday only. This is an intraday strategy for budget, and after budget is over, then we can do a BTST trade. We can trade at 3 p.m. and we can hold that for long. In that case, we can do a simple long straddle. We can do a simple long straddle or a strangle. That's what we can say today. And trade with caution, and the strategy that I shared is for educational purpose only. If you take any trade, because options you can lose a huge amount of money. So if you take trade, you should trade based on the advice of your financial advisor. And I'm not a financial analyst, so all these are for educational purposes. So I hope you enjoyed this video, and thank you for watching.